Hey everybody, Preston Brent here with our Trader User Group Weekly Roundup. This is for the trading week ending February 26th, 2016. Well, we had a really good week this week. We actually finished up, but Friday I just didn't really like the action, the price action, and how the market was reacting here. What I've got on the screen here is the E-mini S&P 500 futures. And overlaying this, I've also got, I wanted to put volume at price. Typically when people look at volume, they only look at it over time. And by that, let me just see if I can put let's put volume in the bottom down here on this chart so that you can see this. Now I've shown this to my members, but I wanted to share it with you guys as well, just so that you can kind of see what the heck I'm talking about here. Um, if we look at the volume down here, every time we've made a solid down move like that, you can see the volume has really spiked up. Okay. Now on the volume down below, I use something that is fairly simple to put together. I use a 5 and a 20 EMA, much like on charts. But only on the volume. So I'm overlaying a 5 exponential moving average with a 20 exponential moving average. So roughly a week of trading time versus a month of trading time. And you can see the minute we started that run down here, the 5 EMA went over the 20, which was a bullish sign for volume, but volume clearly is pointed up. Now, if you look at this volume right here, as we've moved up in that direction, look at the EMAs and the volume, very low. I mean, we just went right back down again, came back down into this lower area here. And then the minute we started this run down right here to do a little bit of a double test down around 1802. In fact, we actually made a lower low over here. Look at the volume again. It's back up. And now, over the past week and a half or so, we've had this explosive move off the 1802 area. But then look at volume. I mean, it's relatively low with the exception of this little spike right here. Um, we've had very low volume again. So folks, I can tell you, and this, by the way, right here is right around January 1st. So this is pretty much 2016 in a nutshell, okay? This is 2016 in a nutshell. Every time we go down, volume goes up. Every time the price action goes up, volume goes down. And it's just up, down, up, down, up, down. And that's probably why a lot of folks are really frustrated with these markets. And a couple of other things I wanted to point out on this. So what I've got here is this is volume, as I said, but it's volume over time. So you can see here, starting right around January, and as we move forward in time, we got it here. But now what I've also got up here is volume at price. And you can almost see this spike right here, which is acting in some respects as either support or resistance, depending on the direction that we're coming from. In this particular case here, it was resistance because there was a lot of buying or selling in this area here. And then you can see the same thing right up in this area here. So there's these two areas here where we have up in this area here, we got a lot of potential sellers lurking. But right in this area here, we've got buyers that have come in and have really driven the price back up in this area here. But then you can see once we get above this area right here, there's almost nobody sitting there. There's no buyers sitting in there. There's been mostly selling that's driven the price down here. So we're stuck in this no man's land. I mean, it's really I think for a lot of traders, it's probably a frustrating type of market. The other thing I wanted to show you here is Friday's price action concerned me just a little bit. Let me just blow it up here and I'll show you what I'm talking about. Let me just come in here and let's put the MACD back on here again. Let me blow it up for you here so that you can see a really larger than life view, if you will, of what I'm looking at here like this, and we'll just blow it up. Okay. All right, now what we've got right here is Friday's price action. We opened and we moved up a pretty good bit, right? I mean, we were solidly in the green. And then as the day moved on, you can see this high point right here. And then we actually closed on the lows of the day. Folks, that's a bearish candle. Um, and you can see here that typically when you get this kind of move right here, it sucks people in and then boom, we just roll right back over. And it does not bode well for looking at the charts and momentum going into Monday. In fact, I was telling our members in our group Friday morning when the markets opened up, the US GDP numbers came in. At first glance, it appeared strong, but then when you go in and dig into the numbers, they were a canard, which means that GDP was estimated to come in about 40 basis points or 0.4%, because in January, the first read of Q4 GDP came in at 0.7% or 70 basis points. So the estimate in February was to be revised down to 0.4% or 40 basis points, but they actually came in at 1%. And the reason why they gapped up like that or moved up GDP number was in further reading in the details, inventory levels in the U.S. increased. Businesses moved, bought product, but didn't sell it. They just bought it, and stocked it. And that's going to have the counter effect in Q1 of reversing back out again, because then businesses are not in the business of just building inventory levels and then letting them sit. They've got to move product. So that tended to overinflate, I think, GDP number a little bit, and that was part of the reversal. The other thing is oil reversed as well going into the day. So right now we've got a very high correlation between oil and equities, and we've got the correlation here just seems to be um, in a number of different assets, from gold to the US dollar, to oil, energy markets, equity markets. It's really amazing how this thing is flowing out. Now, the other thing that I pointed out to our members, and let me just kind of back it out here for a second and I'll show you. And this is again a daily chart. Uh, let me come back out to um, the prior move down caused by when the China devalued the yuan by over 2%. You can see this move down here like this, okay? Now, if I were to draw a resistance line there, just like that, right? And I'm going to just kind of draw it as straight as I can. No, I don't have bourbon in my coffee, but it kind of looks that way. You can see this spike right here, okay? We moved higher on that spike. It was an intraday head fake, and I remember it very well. I also remember this day very well also. It was a Monday morning market crash where we had some lock limit orders, or locked limit on some of the futures markets. But anyway, we spiked up higher here, and we were off of these lows here and we were coming up, and then boom, we went up like that, and everybody thought we were going to come back up to the moon up here. But that head fake reverse came all the way back down, and we tested these opening lows here, okay? We did that test, and then that gave us that bullish divergence there. And then, of course, in our group and our members, I was standing on top of a chair yelling at everybody, we got to go long, we got to go long here. Well, if we look here, and now so remember that spike, we did that reverse, okay? Now, we've got something very similar here, although maybe not as egregious or not as bad, right? So if I were to blow this chart up, and let's just look at this right here. Let me just kind of accelerate it here. You can see here in this same thing here, all right, we've got this area here, and then boom, there's that spike. And I see these in the markets. Sometimes the markets have a way of just flushing people out. So we came way up here, and then we closed right back down into this area again. Folks, this is a hard zone to break, okay? It runs roughly from about 1940, all right, up to about 1950 area. In the E-mini S&P 500 futures. Now, the SPX is just a little bit skewed, a little bit higher, but you get the idea. We've got a lot of resistance here. And as you can see, we got a lot of buying and selling in this area with this volume at price. In fact, it peaks right around this 19, right at about 1915, roughly. Kind of where it peaks. And then we've got empty space. There's just nothing here all the way up to about 2000. So, and I said if we do close above this zone right here, we can expect a retest. And if that retest holds and it starts moving up, then that's a good area to jump on longs. Right now, up in this area here, I think there are some people that are caught off of this low here long, and they're holding on by the skin of their teeth. And of course, there's also that sense of short squeeze going on. Now, down in this area here, let me just clear up my chart here so you can see just what the heck I'm drawing on here. We had a low, and we actually had a lower low. Again, very similar pattern to August, late August. We had that bullish divergence there. We call them a bud in our sessions. And I told people, okay, let's jump on this thing. Let's get long here. And then I said it will probably run up to about the 1940 area. Well, it actually beat me and went up to about 1955 with that spike, but then it rolled right back over again. So where do we go from here? The way the candle and the way the price action was on Friday, I'm a little bit leery about Monday's open. I'm more fearful of moving back down than I am about going back up. If we do go back up and we have a retest of this zone, 1940 to 1950 area in the E-mini futures, or a little bit higher in the SPX, we have a retest and move higher, then that's just a little bit more of a conviction for me for a bullish action. Again, logically, I can argue with you all day long on why the market should not be at this price. I think we've got some global issues going on. I think longer term, the markets are probably due for another pullback. And if let me just take it back out to a weekly chart here just to show you what I'm talking about. You can see right here, if I really take it back out to the lows back down in this area here, you can see that the Fibonacci, the 3.8 area, is where the highs of 2000 and 2007 were. So this is 2007, but if I really stretch it out, let's just kind of move it out, way out in time here, so it you can get an idea. You can see in this area right here, okay, this is where I'm a little bit more concerned. If I were to extend this fib node all the way out like that, you can see the .com bubble high, the 2007 high, and it puts us right on that fib node of 1574, right in that area there, okay? 1574, I'm not writing it very good, right? But you can see right in that area there. So I think our line in the sand for me is around 1787. If we break that and we give it up, then we're going to come for a ride because there's not a lot of volume, as you can see. Now, this volume is based on all the way back to 1998, so that's a lot of volume in here. But you can see this massive amount of support right in this area right here, and then you can see this massive amount of resistance back up into this area here. Now, that is a huge range, and it's an untradeable range. But from this area where we are right here, my big worry again is that if we break the 1787, I think near term we're probably going to be in a little bit of a choppier mode. I think longer term I'm still sticking to my forecast of us rolling back over again. And again, on this weekly chart, if I kind of expand it out a little bit and just show you guys a couple of things here that interest me, you can see on this weekly chart right here, we've made lower lows, okay? We have made these lower lows. And what we have not made is a bullish divergence. You can see here from that low, there, and then there, and there. We're getting lower and lower, and there is absolutely no bullish divergence in that at all. I would love to see the MACD up in this area here. Even the histogram is the same strength to the downside. That would suggest we could run up. And I said, remember, we can run all the way up to about 2050 area before we roll over. And again, this is a weekly chart, so this could put us out into the summer or even the fall of 2016. But I do believe we're more susceptible to a down move over the next 12 months than we are to an up move. So that would suggest that the high is already in. And then we've got to be more of a defensive or shorting nature. Although, again, we're agnostic. We play the markets the way they give them to us. And right now, the markets have given us, these up moves, near-term up moves, so we play them. That's about as simple as that. So I wanted to spend some time just really looking at this chart, the E-minis, on a daily and a weekly basis, and just give you a little bit more detail than you may have been before. And again, as I tell all my members, I've been spending a lot of time on the S&P 500 right now, as you should too. I know there's some stocks out there that may be promising, but if we get a strong rollover, they're all going to go with the index. That's I don't care how strong the stock is. Now we've got some favorites that we're watching and we're following, and we will look at them when the time is right. Okay, I don't think the time is right now. All right, everybody, I want you to have a great weekend. I am traveling this weekend, doing some presentations down in Florida, some trading presentations. It looks to be a lot of fun, a pretty good crowd down here, so I'm looking forward to it. Everybody else, have a great weekend, and I'll see our members tomorrow night. Have tomorrow night at our weekly market watch. If you're not a member of our group, highly encourage you to come in and check us out. Had a good year last year. We've had a good start this year, and I hope to continue our progress. Take care, everybody. Bye now.